All right. Thank you very much, Darrell, and welcome back from Puerto Rico. Puerto Rico is a great place. It would be awesome to go down there and explore the tax savings available by living down there 6 months of the year as well, which I think is available to traders. So, yeah, too much vodka already. Yeah. So for those of you that don't know, first of all, welcome everybody. Yeah, I was sporting a fever earlier today, and I was wondering kind of how I was going to get through tonight. So it should be kind of interesting and entertaining. We'll see how some Dayquil and possibly a splash of vodka work on my cohesiveness and understanding of the material at hand. So for those of you that aren't familiar with what I'm going to talk about tonight, over March, I did a small lot course, which was one of the most popular courses I think I've ever taught, and just in terms of attendance and questions and stuff like that. And so what this is, if you did do the class, this is a kind of a review, but it's also just an opportunity to kind of learn. If you didn't do it, it's to learn kind of what we were talking about, and also just the opportunity of like, okay, if those are the specific signals and strategies that work in a small account, how could I just continue to get these signals for the rest of the year so I don't have to like worry about it and do all this stuff myself? And so that's just kind of the idea what we're going to dive into. And really it's just kind of exploring and talking about, why specifically do people struggle to do this? And hopefully it's just stuff like that that can kind of help you out. And then also specifically what I look for these kind of trades. And we'll just kind of dive right into that. All right. Yeah, no, thanks, Steve. Appreciate it. Thanks, Darth. Yeah, I should do that. So let's just dive right in that. Okay, so first of all, welcome, of course. So the premise of this is what we talked about before, is just what is the struggle here that a lot of people have to face? And so a question for you guys, and if you were with me on the course, you'll kind of know the answer to this, but also if you're newer and it's just like, okay, what are you talking about? I just want to kind of see a show of hands. Who has been struggling growing their trading account, or who has had trouble just making trading work consistently? It's always, I say it's easy to make money in the market. It's actually hard to keep it. And so that's just kind of a theme that we want to talk about tonight. And yeah, so it's if you can't see, there's just tons and tons of yeses scrolling up the screen. And so you're not alone, all right? This, by the way, not only is this a very common occurrence, but the markets are designed to take advantage of you, all right? We're going to talk about exactly how they do that and really how to get out of that. So, and the irony here is that the ones who are struggling the most are typically working 10 times as hard as the ones who are consistent, okay? So just to kind of put salt in the wound there. Now, I know for me, it was like my first 8 years, I'd make money, I'd lose money. One of the best positive stories that came out of that is when I was about 5 years into my trading career, I was at the University of Texas at Austin, and this kind of cute chick in my dorm, I was a junior at the time, she was a freshman. I had overheard her talking with her friend. She had $20,000 in financial aid money sitting in the bank, and they were just like, wow, that's so much money. And I was like, hey, baby, can I trade your account? I mean, obviously it wasn't quite like that. And so I did, and I ended up putting it in a stock. And at this point, I was going to Investor Business Daily meetings. And so I kind of, I was just new enough to be dangerous. And so I put her entire account into a stock called iOmega. And, it was like $5. And then it went up to 36. I set a stop loss at 18 3/4. And it did come down exactly and hit that 18 3/4 stop. And then from there, split adjusted 6 months later is trading at $300. So had I been a genius to hold on and get out at $300, her 20 grand would have turned into $1.4 million. But she made 60,000 on it. And of course, I, gave her money back in a healthy chunk and kept a little bit for myself. Today we're married and we have 3 kids. So I do always wonder what would have happened had I just pardon my French, blown that shit up. But that was, that was an example of a good trade. But then there were also situations during the struggle where I would make this money and just blow it. And that just got very, very frustrating, right? Yeah, you remember, yeah, Omega was awesome. So it was 8 years of struggle. And you know what? The struggle was worth it because you learn a lot, but that doesn't make it any more fun. It still sucked. So if there is anything I can do to prevent the suckage for you, I will, because that's just, it's no fun. I mean, it's stressful. It puts stress on relationships. It's something that you start obsessing about, and it just is no fun. It's not a way to live. So yeah, the 100 megabyte zip drives from iOmega, here to change the world. And I just got an iPad with a terabyte of memory. So that's crazy. So today the markets are harder than when I started, because when I started there wasn't algos and different things like that. But on the other hand, they're also very much the same. And in some cases, honestly, it's easier. But if you dive into the markets, what I just call old school, and you don't really have a plan and you're just kind of following the tape action, I mean, I'm sorry to be blunt, but you're screwed. I mean, you're going to make some money, you're going to lose some money, you're going to lose a lot in commissions, but you're not going to be consistent. You might be consistent for 3 weeks, right? You might be consistent for 6 weeks, but over the course of a lifetime of trading, that Schedule D is not going to look pretty. And so what I'm going to talk about today here is not theoretical. It's what I've really been doing, okay? And I'm not talking about what worked last year and nothing too fancy. I'm just talking about what's working now. And in my experience, will continue to work for some time to come, all right? And that's just what I want to show you and just kind of talk about. So first of all, why small accounts? This is a question that's come up because I obviously like trading big accounts. And I've been trading long enough that sometimes I forget what it was like in the beginning. And I call Henry and like Danielle, they're like my chief interpreters of what I'm trying to say, because a lot of times I'll be in the room and I can go off on a rant. And to me, it's just natural stuff. But, it's also the culmination of doing this for 30 years. And so it's great to, they can actually sit there and say, well, what John was saying was this, and which is actually helpful, but it helps remind me of what it was like, to be a new trader, and all these questions that I had that I thought were so important that were in fact irrelevant. Okay, and that's of course frustrating. And also the hopes and dreams of someone with a small account are so much different than the hopes and dreams of someone with a large account. Typically, if you've got a small account, your dream is just kind of like, God, I just want to make some more money. I need a larger account. It'd be amazing to quit my job. And if you've got there's some threshold, it's different for everybody. When you're trading like a $5,000 or $10,000 account, it is kind of risk money. I mean, you don't want to lose it, but you're like, you know what? Let's give this a shot. But if you're trading, $500,000 or 100 grand, or obviously $1 million or more, you don't really want to lose that, right? So you trade it differently. So what I found is spending my time on a microphone and talking about trades. For some reason, I enjoy it. It actually helps me to focus. I found that when I am kind of on a microphone talking about trading, first of all, I can focus. I mean, my wife leaves me alone, all this kind of stuff, because it's like I'm busy and I kind of get into a zone. So for whatever reason, it's kind of a stupid human trick. I do like doing that and just finding that right balance, but also just kind of, seeing what everybody else's journeys are and stuff like that too. But also, it also kind of gets me in touch with what people are struggling with, and a lot of feedback that I get has specific themes. And this was an email I got, and I've gotten a couple of these. This was kind of towards the end of last year or beginning of the year. And it said, hey, John, I've been a gold subscriber for a couple of years. I've got a small account, and I have a request for you. And during the years I've been a gold subscriber, I have never shown a profit on my account. The problem seems to be that I cannot take your high cost trades with a 10K account. The most recent example being data. I had to pass on that one, and yet when you got in, it's like it doubled right away. So could you please help me with a small account? All right. And I thought that was, and I thought that made a lot of sense. And during the class that, we recently did, is that, and Cookie Monster in there was talking, and he's like, and I'd asked him if it could share this, and he's like, yeah, that's fine. He's like, hey, can we talk psychology for a second? I've been doing great. 99% on the small lot trades, but I did one bad trade on Netflix and it cost me $5,200. I did not enter properly. I did not examine my entry and my exit. And now I'm kind of out of sorts and I've lost my edge. Can you comment? All right. And this is the moment that if you do not have a plan, it's not a question of if something like this is going to happen to you. It's just a matter of when. And at some point, if it's happened to you over and over and over again, you've got to put a stake in the ground as to what you will tolerate in the future. Okay. And it gets to the point where literally it's like, and pardon my French, but it's like, I put a stake in the ground and say, I do not want to go through this bullshit anymore. And so it's how do you structure your account and your trading so that you don't get inflicted with this kind of unconscious self-sabotage is what I call it. And so this is going to be something that if you're unaware of it will require constant vigilance during your entire career. All right. This is the curse of euphoria, especially. The worst drawdowns typically happen after 4, 5, 6 winners in a row. Have a great run. All of a sudden, you can think that you are invincible, and you decide to push the envelope when all that's happened is that you have been in a portion of the probability curve where you're getting 6 trades in a row that win, as opposed to 2 that win and 1 that lose, or 3 that lose and 2 that win. Okay, the roll of the dice is you're in the probability curve where you got 6 winners in a row. It has nothing to do with your genius, okay? But as human beings, we try to make meaning of that, and then we take that information and we go to town, which basically means you stop following your rules. So how do you get around this? You got to think in terms of that you have to incorporate your checklist, which I will share with you, and position sizing parameters on every trade, okay? And basically, if you don't, you're screwed. I'm going to show you a simple 1-page checklist, and if you follow it, you'll be fine. And if you don't follow it, good luck. You're inviting the piranhas to come and basically chew you up, okay? And always remember, you have no idea what's going to happen next, and the only thing you can control is your risk, of course, and when you get in and out of trades. So Indigo, I've been there. Indigo's saying, I lost so much money and I threw it for a week. And yeah, that's not fun. It's not fun. I remember the first time I lost $1,000, I threw up, and the next time it wasn't so bad. You know, or there's times when it's, you know, you have trading funds. It's like, oh man, things come up, right? And it's just, how do you get into that consistent groove? It could be Tim. Yeah, golf's a good analogy. It's you know, you have 3 good shots in a row and you get cocky, and that 4th one, you know, it's going to go into the water, right? Or it's going to go into the sand because you get cocky. So here's the deal. All right. Here's the deal. First of all, as you guys know, one of my favorite setups, I think a lot of you know that one of my favorite setups is a squeeze, and that's what this is. And all this represents is a compression of volatility, okay? And it also represents what I call the ideal entry zone. And we're going to talk about what these are, but this zone here is the ideal entry zone, okay? Precise entries are crap, but there is an ideal entry zone. And frankly, if you're not entering in the ideal entry zone, your risk in the trade goes up exponentially, okay? Here's what happens to most people. They wake up, they start scanning the markets, and like, ooh, what's moving today? Microsoft. Awesome. I'm going to buy some. I'm going to buy some cheap out of the money calls. And in this case, you know, it didn't do bad. It didn't go down, but it went sideways for 7 days. Okay. If you bought some cheap out of the money calls, you got killed. All right. And then, of course, guess what? It reverts back to the mean. And this is where you want to enter. If there's not a squeeze, that's the only safe entry, because guess what? We're coming back there. The algos will push you back. All right. So you just got to sit there. You've got to miss all this. All right. We'll talk about that. Tim, that's awesome. Tim's just saying, John, I had a big problem with over trading, which is also the death knell of trading, because if you over trade, you automatically, and this is so important to understand, there's the reptilian part of your brain takes over, okay? The reptilian part of your brain focuses on fear and greed, and it's, you know, it's what's looking for food and trying to protect you from danger and looking for a mate. If you are unaware of that and you start over trading, that's what automatically kicks in, and you are not aware of this, okay? A lot of the times we are moist robots just kind of walking around on autopilot on these pre-programmed survival things that we learned as a kid. It's like, if you really look into that, it's very, very disturbing. I mean, in a good way. But if you're unaware of it, you are screwed, because you actually are not really in control of what you're doing. You're just automatically reacting to stuff, and you're unaware of it. And that's the biggest danger to any trader. You know, as an example, this is a typical what I call unconscious scenario, where you're actually not in control of your actions. Okay. Have you ever been in a situation where it feels like you're sitting outside of yourself, wondering, what am I doing? Okay. And that's kind of that's when you start kind of slowly becoming aware of that. And it happens to everybody. And most of the time, that's the state that a lot of people are in, unless you just kind of learn mindfulness, or you have a specific checklist that you follow that automatically helps you avoid that. Okay. It sucks. So what happens here is you get in, you're excited, there's euphoria, it starts to come back, and about right here, it's like, well, you know what? As soon as it comes back up here, I'm going to get out. All right. Then it goes below your entry, and then it's kind of fearful. And it's like, all right, as soon as it gets to break even, I'll get out. And then there's panic. It's like, oh God, what did I do? Maybe I should add a little bit more here. And then it's like, screw it, I'm out. And there's despondence and frustration. Oh, and guess what? It is at that moment in time you've got the highest potential for earning. This is when you want to get in. Your entry is someone else's stop loss. Okay, and that's really what you want to think of it. And when, whether you're trading the long or the short side, it doesn't matter. Otherwise, without that, you are automatically latched in and hooked into that unconscious cycle that human beings fall into. Okay. So anyway, that's one of many emails. So that kind of hit me behind the eyes. So real quick here. So so at the beginning of the year, I set up a $6,000 account. I'll show you real quick. So at the end of January, so here was the balance. This is the statement, January 1st, 31st. I set this $5,900 account. I was trying to set up a $6,000 account, but it ended up at $5,937. At the end of the month, it was at $11,935. So you got a return of 101%. So we're at 11,009, and then here we are February 18th at 16,000. So it was up 41% there from February 1st, and then February 28th it's at 19,000. March 5th at 20,000. March 11th at 24,000. With profits of $15,000, and then ended the month with profits of $21,000. So it was like whatever that was, $27,000. And so again, the whole idea of this is that you are trading this account in a deliberate way. Okay. And by the way, I know, and it's kind of frustrating. There's a lot of times, there may be a huge day where you're not making that much money, but then on a flat day, you're killing it. Okay. That's because you're not trading the markets. Here is an example of 2 portfolio days where, you actually never want a day where all your positions are making money, because that means you're incorrectly positioned for the market. So on this day, Yandex here was down, okay, and CMG was down, but my spider puts, that was a hedge, by the way, was taking care of all those losses and leaving me a profit to boot. Now, sometimes hedges don't work. I had hedges on Monday. I certainly didn't need them, so that dampened my profit. But again, we're going to talk about why you're going to look for certain triggers, and you want to have them, because yes, there are some days when the market does actually go down. This was a screenshot from, this was today. So, Boeing, I was down $50. The euro, I'm down $30. Here's my IWM hedge kicking me in the teeth. Yet on OLED, I'm killing it. Okay. I say I'm killing it. It's just the trade because I followed a specific setup. So that's the whole idea of this. You actually don't want a day where all your positions are working. That means you're positioned incorrectly. Okay. And obviously you don't want a day where everything's not working. So the whole idea with this is that it's getting off of, part of this is what Mark Douglas talked about a lot, is everybody puts so much importance on the trade that they're in when the trade that they're in has nothing to do with their success as a trader. Okay, so what does that mean? That means that the current trade you're in is irrelevant. What matters is your next block of 25 trades. Okay, if you've got a block of 25 trades, were you able to make money, yes or no? Okay, so if you look at this, here's a representation of a block of about 25 trades. Okay, great. Does every trade work? No. Here we start off a little down, we make new equity highs, we pull back, make new equity highs, we pull back, make new equity highs, we pull back. But you'll notice that the equity curve trends from the lower left of the screen to the upper right, because over the course of 25 trades, it works. And because we're not so concerned about any one position, because, well, I'll talk more about this later, but what we do is we actually focus on the net liquidating value. All right, so that's kind of the stuff that we look at there. Now, my largest loss in a trade this year was, well, it wasn't last week, it was a couple of weeks ago, I think it was mid-March, was in John Deere. Okay, in a small lot account, my balance at the time was about $20,000, and on one trade, I'm losing $1,750. That's too much. Okay, that's too much. What the hell am I doing holding on to this dog turd? However, I also had spider puts, and I was up $1,700. So if you notice, my net liquidating value at this time was holding steady. That's what a hedge does. Okay. If I didn't have these spider puts, yeah, I'd have cut this loose a lot sooner. But when you're managing your net liquidating value, all of a sudden your attitude towards your positions changes, all right? Because that's what you care about, is the balance of your account. So had I not had hedges, I would have cut my losses in John Deere much, much sooner, okay? Because remember, the only thing that matters is your NLV, which is your net liquidating value, which is the, essentially, if you had to sell everything in your account, what would the value be, okay? A lesson for this: there is no difference from a realized loss or an unrealized loss. They're the same damn thing, because you are managing based on your net liquidating value. So get over the whole idea of, oh my gosh, this is down $500. I got to wait till it comes back. No, you don't. It doesn't matter, because you're managing your net liquidating value. And say it again, the difference between a realized loss and an unrealized loss is there is no difference. They're the same damn thing, because your balance is your balance, right? So, you know, losses are great. You want lots of small losses. That means you're doing your job. So anyway, this, for those of you that don't know, I have a book out, Mastering the Trade. The 3rd edition just came out in December. Now, there's a lot of good stuff in here, but none of what I'm talking about here is in this book. I don't know, and if whenever I do the 4th edition, I don't think I'm going to put this in there. It's just, this is your basics, you know, psychology, what's a squeeze, and stuff like that too. So this is all stuff that's just not in there, but it's kind of the core of what works in this environment. So what is the best way to do this? Okay, I don't know when the Audible will come out. It'll be interesting though, so that'll be good. Thanks, Jeff. Jeff saying, since you're sick, I have covered the swear jar for you tonight. Fire away. It actually helps to drive the points home. I appreciate it. Yeah, I'm actually impressed that I'm able to, it seems like in my mind, I'm completing sentences, but you guys have to tell me after this. It's like, we didn't understand a word you were saying. Okay, so what is the best way to do this? So before we dive into my favorite ways to create an equity curve that goes from the lower left to the upper right, it's important to understand the best ways that this will not work, okay? So once you understand the number one way something will not work, that will help you understand how it will work, okay? There's a couple of metaphors running through my head right now, and I think none of them are appropriate, so I'm going to keep on going. So there are some things that work great once in a while, but they're horrible in terms of a consistent basis. Here's the thing about trading is the market traps you into creating bad habits, okay? So you're in a position, it's about to hit your stop, you pull your stop, it goes through, but then it turns around and rallies and you're able to get out for break even. The market just rewarded you for an incredibly bad, nasty habit, okay? So the market rewards you for bad habits, because all that has to happen is it just doesn't have to, you know, just doesn't have to work one time and you're done, okay? So as a trader, your main goal is to focus on consistency over fun and excitement, okay? So what's the absolute worst thing that you can do, okay? Yeah. Sorry, Jenny. Yeah, the book's actually really good. None of this is in the book. That's a great plug for the book. It's actually it's a solid book, but yeah, that's funny. Okay, so chasing a stock that is rallying hard and is extended and buying far out of the money calls, that's probably the biggest, most consistent mistake I see traders make, all right? And I love these images because it's like escape plan status fail. I mean, that's a visual. And then here, plan B, because you failed at plan A. That's what happens there, because then you start spending the rest of your trading day or your trading week figuring out how to get out of that situation. And of course you can't, but everybody wants to try to defend it and work their way out and waste all kinds of time trying to justify their bad choice, okay? Trying to justify their bad choice, which is what humans do. So what this is FOMO, okay? And this is really important to understand this psychological thing. So FOMO means fear of missing out. FOMO is the anxiety that one has caused by the fear of missing out on any social event or positive experience, especially one that you've heard about through social media. Well, maybe there, but the thing here is that what happens is that you fear missing out of a positive experience. So when a stock is rallying, is at new highs, and you're not in it, what's happening as a trader, you start to visualize how much money you would be making had you bought it. That positive experience has now embedded itself in your brain and you want to replicate it. So what do? You buy the damn thing at the highs. Okay, that's how FOMO screws you. It's a condition caused by anxiety and characterized by a desire to stay connected with what others are doing. Hey, everybody else is making money in that. I want to do it too. Okay. So instead, we will be much more methodical and specific. Okay. We won't chase pipe dreams, and we will have a plan of attack that works within the construct of how the markets and the computers really operate. So it's important to understand that the price action you are viewing is much less random and much less news driven than you think it is. And one of the things I want you to remember here, and I think I've got a slide about this, but when you start to experience FOMO, switch your mind to JOMO. Okay, JOMO is the joy of missing out. All right, because when you start to master the joy of missing out, that means now you're kind of zenned out. You know, you're going to let everybody else go and chase that pipe dream. And instead of being FOMO about it, you are going to be joyful that you are missing out because you know how stupid it is. All right. So just think the next time you're about to run and do something because of a expected positive feeling or dopamine rush, just think JOMO and save your life. Okay, so plan of attack. So I'm going to throw out a couple of things here on how to manage these kind of portfolios. Okay. So now net liquidity, when I say NLV, for those of you that are newer to that concept, that basically is your account balance. Okay. Not your cash account balance, your total account balance, including all your positions, everything that you have. And if you sold it all, your net liquidating value, what your account would be worth. Okay. So here's what I do. I trail a 15% from peak stop loss at all times. Okay. If you guys were looking at my equity curve, what would happen is I would go up and you'd make new highs, and then it would drop, drop, drop. And guess what? If it hit 15% down from new highs, I go flat. I don't care. I don't care what the position is. I don't care what the market is doing, because my main concern is managing my net liquidating value. So I go flat. Now, by the way, if you've got hedges in place, a lot of times that doesn't happen because the hedges offset that, but that's my hard gap stop. You know, if I, does that make sense? And so your 15% stop is based on your current net liquidating value. So if you've got, you start off with 10K and, at the end of the week, you're at 12K, okay, your trailing stop loss in this case is going to be $10,500. So if it falls to $10,500, which is a 15% drop over the next week or so, you are not asking questions. You're not doubling down. You're going to get out, you're going to reset, and you're going to start over. You're going to find the next setup. Okay. It's one of the most important things I do. I've had to do it twice this year so far. A lot of times you don't have to do it if you know how to hedge, you know how to position size, but it's one of the most important things you can do, because you can recover from a 15% drawdown. You cannot recover from a 50% drawdown or a 70% drawdown. Okay. And by the way, if you still like your positions, reentry is only a commission away. Okay. But first and foremost, that's your main goal. So no questions asked, go flat and wait 24 hours. So part of your quest now, okay, if that's what your rule is, part of your quest becomes structuring your portfolio so that doesn't happen very often. Okay, we'll talk about that. It's going to happen, but it doesn't have to happen very often. Like I said, this year it's happened to me twice, 2 times in 1 quarter. That's not too bad. My goal for this next quarter is once or less. Now, one little side note here, this will happen much less frequently if you remember to close out longs on the second and third non-monthly expiration Fridays. And here I have what? A couple of times sometimes on Fridays, I will just go flat, because oftentimes, not every time, especially not in February or whatever month this is, not at the end of March and April. Oftentimes though, as you get into the middle of the month, you get these big rallies on Thursday and Friday, and then you get that little puke on Monday. Okay. Guess what? Take your profits, go flat on Friday, and re-enter on Monday. It will save you a lot of grief. So the key here is to balance out your position risk. So let's say I've got 6 positions at 15% each, okay? That would be a max portfolio for me. So 90% of my portfolio is invested. First of all, I would never, ever have 6 positions with long calls in this situation. I would never have 6 positions all in tech, and I would never have 6 positions based on the same setup, okay? So there is the whole idea that you can have a loaded portfolio, but you diversify it, okay? So how do you diversify it? Because I'm not like, oh, let's do oil and gold and bonds. That's for pension funds. Here's an example of a screenshot of a portfolio that I had a couple of weeks ago. Okay, so this is balancing out setups and exposure. So in this situation, what I did is I had a put credit spread on Chipotle's. This is a lower risk theta positive, if you're familiar with what that means. If you aren't, that's fine. Trade. And then I've got a earnings run call on Beat. Okay, that's a little bit higher risk, but it's balanced out. But I also have puts on the spider because there's a 195-minute squeeze setup plus other hedge triggers. Okay, so I do look out for those hedge triggers. I've got a Netflix put credit spread on a reversion to the mean. I've got a daily call on ZS and an options expiration play on SPX. Okay, and of course I know my time of the month. So if it's Friday, then what I'm going to be doing then, of course, is closing out my long calls, especially if they're extended, possibly holding on to my hedges in the Monday. All right, that's an example of a portfolio that works if your main goal is consistency. Okay, if your main goal is consistency. So, time of the day, week, and month. So by going flat on a Friday, again, it's not a hard rule. It's just sometimes you're going to get a Friday where everything's great, all your positions are extended, and oftentimes, not every times, especially not the last couple of weeks. I mean, the market's been on fire, right? But on Monday, you get this gap down. There's this thought of like, God, if I just hold on, Monday's going to be amazing. And it's like, it turns into a 10% down day in your portfolio. And so it's just managing that. So markets tend to drop at the beginning of the week, particularly around the middle of the month. Now, that did not really happen in this. The last 3 weeks has been an anomaly. It's been insane. Okay, so again, normal markets. So, a lot of times if you looked at the Monday after March expiration, it imploded. That's pretty common. Okay, and so that's the kind of stuff that we want to be aware of as part of this management program. So you'll notice here, and this is an example of here's Monday, June 11th. Okay, what happened after? The markets went down. Monday, July 16th. Okay, markets went down. Monday, August 16th. Boom. Monday, September 17th. Boom. Monday, October 22nd. Boom. Monday, November 12th. Boom. Monday. Here, there's like a little pullback. Monday, so it happens. Now, obviously, today's Wednesday, Monday, April 1st, the markets exploded. Okay, so yes, sometimes they're going to go up, but a lot of times Mondays, especially in the middle of the month, are down. So just keep that in mind. So each day, the best entries are usually in the first 30 minutes of the day. This bodes well for people who work full time because guess what? You don't need to watch the markets all day. Once I show you this checklist, you can place your orders in the night before with the idea that you might get picked up in the morning, go to work, come back, and see what happened. These can be a gold mine in terms of solid entries on planned trades because in the mornings, algos are running stops and dumb money is following the latest advice from CNBC, which of course is very old news. It's a great time to buy retracements to the mean. More on this in a bit. And the last hour often has sharp reversals higher or lower. So if you are watching the markets, that's something to take advantage of. So one question that comes up, because one of the common adages that people hear is like, hey, you are supposed to let winners run. And don't get me wrong, I do. If I've got a good horse, I want to ride that horse as long as I can. But for a small account, I don't want to do that. Okay, I'm not looking for big moves, believe it or not. I know that sounds insane. So if you've got 6 positions at 15% each and the account balance is 20,000, let's say that 5 positions don't do anything, and 1 position goes crazy, and your balance is now $24,000. Now, your one winning trade represents 30% of your portfolio. That's insane. So if something happens to this one position, your net liquidating value is screwed. Okay, so this is why I say you're not looking necessarily for winners to run. You're managing this based on your net liquidating value, because that's what's important here. So you want to scale out to where it only represents 15% of the new balance. So if you've got a trade that's doing great, it's like, man, I'm killing it here. And you're like, oh my God, this thing that represents 25% of my account, that's fine. Sell it off until you're back to that 15%, okay? That's how you can scale out of a winner over and over and over again. So if a position is suddenly worth 20% of the portfolio, I scale back to 15% regardless, okay? That's one of my rules. Example, when I showed this, I had 4 calls on Roku that I bought at $5. They had gone to 10. So guess what? I got to sell half my position. So I'm back to my original risk on the trade as a percentage of my portfolio. This is mechanical and easy to follow in terms of the rules. Okay. So small lot ATR rules. So if you're not sure what ATR is, that's just average true range. This is a very common indicator. It's available on any platform. And all the average true range tell you is literally, if you go back 14, I typically use 14 days or 21. They're about the same. These days I've been using 14 because the market's been pretty volatile. But it'll say like, okay, the average true range of this stock is $4.50. Okay, great. Guess what? If you get into a stock and it goes up 2 times the average true range, okay, in this case $9, there is absolutely no reason for you to hang on to that stock any longer based on this strategy. Okay, yeah, it could keep on going, but you don't care. If you can get your 2 ATR, you're out of there. All right, so that's a kind of a simple process. So, and you can, I'll show you how to measure that and all that kind of stuff too. So the key with this then is just having a checklist. You need a checklist to protect yourself from yourself, because if you don't have a specific checklist where exact conditions have to be met, if you don't do that, you are going to unleash your inner unconscious animal, literally your reptilian brain is going to automatically click in and take over, and you're going to get on the FOMO wheel, and you're not even going to realize it until the day is over. That's the really crappy thing about that, because you do not realize it until after the fact. When it happens, it's just automatic. You're not aware of it. It's really strange, but that's how the human brain keeps us alive. You know, it's that fight or flight mode. So checklist is key, not only for entries. You've got to have a set of rules to protect yourself from FOMO and to get you to understand JOMO. Okay, you got to protect yourself from the fear of missing out, and then learn to understand and appreciate the joy of missing out, because you know how bad those poor suckers who got tricked are going to get hurt on that. Okay, this means being very picky, no emotions, and you have a specific checklist of key tools, and it's a list that if the conditions are not all lined up, you just pass, because guess what? There are plenty of trades out there. So these are the tools that I use. Now I'm going to show you an example of a trade that I would not take. So the stuff that I use, first of all, is the 80. Again, these are all indicators that are available on your platform. There's no special tricks or anything like that. ADX is the average directional index. For a long, it needs to be over 20. Okay, so this is coded here to be, if it's green, great. Now the average true range, which we talked about, I just use that as an FYI. So we know that Chipotle's is $13. If we get in at a good entry and it goes to 26, we're out. Okay, generally for a beta, I want it over 1. Okay, so CMG here is not over 1. Bollinger percent B should be gray. Okay, this is not gray. 52-week percent channel should be green within 90%. By the way, this will all be written down. And well, here, let's go over here because you can kind of see. So basically, all of these need to say yes. Okay, so is the ADX over 20 in green? Yes. ATR, not a factor, just an FYI, because we know that 2 ATR is our target. Is the beta over 1 in green? No. All right, so that's 1 strike against it. The Bollinger percent B is gray, which means it's neutral. No, there's 2 strikes against it. Okay, is the 52-week channel green? Meaning, is it within 90% of new 52-week highs? Yes. Okay, that's good. Is the 60-day channel green? Is it within 90% of new 60-day highs? Yes. Okay, so that works.
Is the RSI gray, meaning neutral? No, it's overbought. Okay, so that's a no. Are the moving averages stacked positive, i.e. is the 8 on top of the 21, which is on top of the 34, which is on top of the 55, which is on top of the 89? Yes, that's good. So that's good. Are the stochastics gray and neutral? No, they're overbought. All right. Is the weekly VWAP above the monthly VWAP? Yes, so that's good. Are we at the mean or near between the 1 ATR bands? No. And by the way, that's right here. Okay, so visually, that's your only entry level. You don't, if it's your only entry level. Is there a squeeze? No. So basically, I can look at something, run it through my checklist, and say, this is a screaming no. Because for longs, we want to see all yes. Otherwise, it's a no. Okay? Yeah, all these are on toss. So all these are on toss. They're all, you know, basic indicators. Okay, so for longs, we want to see all yes. So let's try this again. Is the ADX over 20 in green? Yes. ATR, remember, is not a factor, just an FYI. Okay, it's now look at this. ATR is 4.8. That means 2 times the ATR is blah, blah, blah. What is that? 860. Okay, keep that in mind. Is the beta over 1 in green? Yes. Is the Bollinger percent gray, meaning that it's neutral in terms of an oversold? Yes. Is the 52-week channel green? Yes. Is the 60-day channel green? Yes. Is the RSI gray, meaning that it's not overbought? Yes. Are the moving averages stacked positive? Yes. Is the stochastic gray, meaning it's not overbought? Yes. Is the VWAP above the monthly? Is the weekly VWAP above the monthly VWAP? Yes. Is it at or near the mean? Okay, so to buy it, it has to be between the 1 ATR bands, which is right here. This is the buy zone. Okay, this is the mean. This is 1 ATR up. This is 1 ATR down. The only time you should ever enter a position in the rest of the history of your life as a trader is between those bands. Okay, yeah, if you can get it right at the mean, that's great. At the lower band, great. It's the same for shorts on rallies. You just got to get in that zone, man. If you're too far above that zone, you are FOMOing it. Bonus, is there a squeeze play? Yes. This is an example of the perfect setup that I am looking for. Perfect. Now, again, you guys will get a copy of this, so you can use this as a model. I would trade this 1,000% of the time. Okay. Now, guess what? Here we are a couple of days later. That's where this thing came up on our scan. Here's the stock today. If you guys didn't see this, we actually got up 3 ATR. Okay, there's the squeeze. How did that work out for our small lot account? Well, we bought 2 of these suckers at $7.90. And a lot of times when people are trading small accounts, they're like, man, $7.90, that sure is expensive. But yeah, when you're going to get a big move like this, that could be 2 ATR, and you flip them out at 18, right? That's a, what, 130% return after 3 days, okay? So that's the kind of stuff I'm talking about here. So two contracts, what is that? $1,600 allocated, which turns into $2,030 in profits. Okay, does that make sense? That's a textbook play. It's a textbook play. Yeah, so in this one, so what I do on something like this is that in this case, you can see the 150 calls. So if I'm going to buy a call, I generally buy a Delta 70 call, okay, which at the time of entry, which is generally about 2 strikes in the money. That's my favorite one. Now, there's 2 reasons why I wouldn't do that. First of all, if it's a stock like Amazon and those calls are like $40, I can't do that in a small account. So in that case, I would have to do a call debit spread or a put credit spread. The other time that I would use a spread instead of a straight call is, and again, this is a minor detail. So if you're a more advanced options trader, great. If not, it's not a big deal. But if the implied volatility is typically 50% or more greater than its normal volatility, then I will typically do a spread as well. It just means that the implied volatility is really high and you're going to have a lot more premium decay. Again, minor detail because it's not really a big deal. All right. Now, another one that came up right here is the same idea. This trade met all the criteria. Is the ADX over 20? Yes. Here's the ATR as an FYI. Is the beta over 1? Yes. Now, at the time of the screenshot, this is red. It's supposed to be gray, and this is red, and this is red, but that's because we got in here when it was gray. So same thing here, classic setup. Guess what? We got in at the upper band here. Okay, this is the entry zone. We got in here at the top of the entry zone. And from here, we went from about 145 to 147 in about 5 trading days. Okay, that's the kind of stuff we're looking for. And in this case, we risked a total of about, now in this case, because the implied volatility was high, we did more spreads and then threw in a call. So very solid trade. We ended up getting out of that today when it was trading around $160. Okay, so that's the idea. So proof is in the pudding. So yes, I remember what it was like to have a small account. In fact, I blew up 3 accounts during that 8-year run. I'd go from $10,000 to like 120, and then I'd go crazy, and it's just, you know, euphoria. And so, you know, you learn different strategies. You just don't have to do that anymore. But what's really more interesting here is that my years of experience trading larger accounts since then has given me insights into better ways to trade a small account, which is kind of fascinating. Because while setups are important, it's the overall process, attitude, and workflow that make a difference. Now, this is a very important, cruel thing I want to tell you guys here, because without this, all you are doing is you're personally financing your own destruction. Okay, I'm going to say that again. Because while the setups are important, it's the overall process, attitude, and workflow that make the difference. Because without that, all you're doing is financing your own destruction. That is a very harsh way to look at trading. If you're trading without this information, if you're trading without a plan, you're basically financing your miserable, your miserableness and financial destruction. Like the best thing you can do, I remember Mark Douglas said this once. He's like, if people can't get their arms around having a plan, if they stop trading, that's the same as putting money in the bank. It's like, oh, wow, brutal. But it's the truth. You know, it's the hard truth there. So the key with this is you're setting up things so that if a move doesn't work, it doesn't have to be devastating, okay? Here's a day when I'm long Amazon, okay? And it's down $64. And overnight, I'm only down $57, okay? So you're structuring your trades so that if you're wrong, it's not a big deal. Also, you're going to alternate between being 90% invested, which, you know, you only do that about twice a month, 50% invested, and 25% invested. Right now, I am only, or lower. Right now, I am only 10% invested as of tonight. I'm 90% cash. Why? Because we are extreme across the board. So I'm kind of out of all my longs and just kind of waiting for the next signals. Okay. So why options? You have fixed risks. So you don't do any naked options because that's not fixed risk. You got asset class flexibility. We bought puts on the euro yesterday because there's a setup in the US dollar. And so you can kind of trade anything with these options. Strategy variation, long calls, long puts, spreads. I do trade futures and Forex, but they don't necessarily have fixed risk. You know, they do, but there's, you know, overnight gaps that can be really scary. I'm also a fan of crypto, but it's much less flexible than options trading. So options are easy to understand. They're easy to use. They don't require being in front of a computer all day. And then, of course, they offer a lot of leverage on a stock. And so the strategies that I discussed here, they offer extremely limited risk while offering great upside potential, which is great. And it's done in such a way as to eliminate negative surprises, which is the best way to grow an account quickly. So remember, key tips here. Price targets are not as important as NLV management. Okay, that's a whole key with this. So in this particular trade in Roku, it didn't even hit my targets. I just started getting out, okay, because it was going in my favor and it was becoming too big a part of my portfolio. That's part of the management. So small account portfolio management is really about active pruning. Now, I'm not really a gardener, but my wife, Maria, loves to garden. So she's out there. We got rose bushes out in Wimberley, and she actively prunes them. And if you're trading a small account, you are a gardener because you will be actively pruning your account. So what does pruning your account mean? Okay. So if you're pruning, the reason you prune a rose bush is that if you want the prettiest, best looking roses, you got to cut away the crap. Okay. Otherwise, the dead wood soaks up all the nutrients and you get mediocre roses. Okay, same thing in an account. If you have mediocre positions that are taking up your mental capital and your real capital, okay, you're going to have a mediocre account. So you will actively reduce, essentially reduce the extent of something by removing superfluous, if I can say that word, superfluous or unwanted parts. Target the removal of diseased, damaged, dead, non-productive, structurally unsound, or otherwise unwanted tissue from crop and landscape plants. What this means is that every couple of days you're looking at your portfolio, and if it ain't working for you, get rid of it. Okay, you have a specific plan around that, but it's kind of like you get into a trade, and from the very moment you get in, it's just not working. The next day it's still not working, and it's not at your stop. It's just like, get rid of it. So that's part of it, because that capital can be reallocated into a setup. Also, I do like to structure 15% of my trades as low risk lottos. Okay, what does that mean? This is a strategy called a butterfly. Now, most of the time, this is what happens. In this case, I bought it for 28 cents. So guess what? My max risk is 280 bucks. It's $5 wide, so I could make $4,700. Very, very unlikely. What actually happened was that I was able to sell this for about 60 cents. So that means my profit was a double of about 300 bucks. All right, so that's kind of typical. What's nice about these is that you typically, get a double, but you could potentially get a 10x. All right. As an example, we did a trade in Amazon. I wish I would have done 100 contracts, but this is an example of a 10x trade where we bought a butterfly for $1.42. So my max risk on the trade, if this went to zero, was I'd lose $142. And we were able to sell it for $15 and change. Okay. $1,435 profit. That's 10x. Those, they don't happen very much, but they happen enough, because guess what? If you're right, you can risk one to make 10, which is great. And then I'm not a huge fan of out of the money options, but I do make an exception when I'm rolling the indexes. And there's specific triggers for that, where you can buy kind of cheap out of the money puts or calls on the spiders and then flip them out, typically for a triple. And those are kind of fun as well. Yeah, so David, great question. So you can't trade that much in a small account because of the day trading rules. Yes. So all this stuff is designed to take that in mind. So I'm never in and out of a trade the same day. So that's just part of it. Typically any trade I'm doing, I'm holding overnight. There are a couple of workarounds with the SPX. You could let those cash settle on the same day, and that gets around it. You can trade like ES options, that gets around the rule. But if you're just trading options on stocks, yeah. So, on all these stuff, no day trades. Honestly, I think that's a good thing. Day trading for most people is no bueno. But remember, because we're so patient and we're getting good entries, we don't typically a bad day trade is because somebody buys the dead highs and then they have to get out. We're never ever doing that. We're missing out on a lot of trades, and we're experiencing JOMO while we do it. Also, you really, really bad if your portfolio is all up. It can happen, and I'm not chastising you for it, but if you're properly structuring your portfolio, if the S&Ps are up, you shouldn't have everything up on the day. You should be making money, because if the S&Ps are down, you really shouldn't be getting whacked either. All right, so that's part of it too. You don't necessarily want to be a slave to the S&P 500. Okay, so just some examples there. All right, so in order to consistently make money, a trader has to learn how to create steady winners off of their trading account, avoid the sucker bets that most traders unknowingly take and then lose money on. Okay, guess what? If you follow that checklist, you're not going to take any sucker trades. Yeah, you're going to get stopped out from time to time. That's normal. It's called trading, not guaranteed profits. That's like it's called fishing, not guaranteed to catch a fish. But if you follow the checklist, you're going to miss out on a lot of trades, and you're just going to have to get over that and experience the joy of missing out. But you're not going to do the stupid sucker trades that suck in most people and cause all the frustration. You know when to rotate out of your current bets. That's basically you get 2 ATR, get out. Congratulations, ring the register, get a new one at the mean, and then manage your net liquidating value. All right, so that's the key. Most traders are tricked by the markets and the financial press to get into trades that set them up to lose from the moment they enter the position because of FOMO. All right, so if you've liked what I've shared, so first of all, you can take everything that I've shown you tonight, and you're going to get a copy of these slides, and you can do it all yourself. We just did a class on this, so a lot of you guys already know how to do this. And so what has come up with this is I've gotten a lot of people going, John, this is great. I'm still uncertain about being able to do this on my own. Can I just follow your trades in your small lot account for the rest of the year? All right, so for those of you that are in the gold room, we all post a bunch of trades in there, and there's all kinds of trades, big lot, small lot, futures. So we decided just to set up a text alert service just for this account to kind of mimic that account. So the question is if you'd be interested in working with me on your small lot account for the next 12 months, we just kind of set up this pilot program. And the goal with this is just to keep the money you make, understand the specific small account money management principles and tips that allow you to keep the money that you make, and don't blow it this time. Learn how to maximize the benefits of trading options, even on smaller accounts than 25K that invoke the day trading rule, okay? So with what we're gonna be doing here is that we're gonna be providing clarity, okay? The small account mastery, you get to focus on one proven strategy and stay on track. And I kind of hold your hand along the way over the course of the next 12 months so you can kind of get that reassurance of what's going on. You get to focus on consistency. If you can't watch the market, you'll get trades sent right to you. Once a month, we get together and trade live, so you can ask questions. And by the way, if you're a gold member, you can get $1,000 off of this program. All right, so the main thing about this is that we will be doing live trading once a month, so you can see, you know, this how it's happening in real time. But in between that, just getting text alerts that are just based on exactly what I showed you. Hey, by the way, OLED is at the mean. We're buying some calls here and we're taking some profits. So anytime that I'm doing a trade, exit or entry for my small account, that you know what's going on. We're going to set up 12 live trading dates. Now, some of these could change, of course, but there'll be 12, one each month. So we can actually spend time together. You can see doing this in a live environment, and of course, stick around and ask questions. So, so what we're doing with this is that if you go to simplertrading.com/growth, you can sign up for this. This is, again, a pilot program. We are, now, just so you guys know, so you guys are all kind of in the family here. So here's two reasons why we're doing this. One is a lot of people have asked for it, so it's like, great. Now, if you're not a gold member, I'm going to give you a little tip here. Don't pay that price. Okay, that's going to be for people that find us on Facebook and don't know who we are. Okay, so all you got to do is, if you're not a gold member, you'll see this right above it. Sign up, do a $7 trial. Okay, and then you'll be eligible for the lower quarterly price or annual price. Okay, and again, with this for the next year, and we're at this point, we're just going to do it for a year, and we'll have the 12 live trading sessions and text alerts of what's going on in the small account. Okay, now what's going to happen is, and if you see, is that what we found out is that there's a lot of people out there that don't necessarily take trading seriously, but want to learn how to trade options, and for some reason, they're willing to pay $4,000 or $5,000 for a service like this. So what's going to happen is we're going to keep this open for all you guys until I think the 3rd week in April. You know, again, you're in the family here. So it's just like, look, if you want this, here's kind of the charter rate to do it if it's interesting to you. And by the way, if it's not, that's totally fine. I'm giving you everything to do on your own too. But what's going to happen then is, then after that, I call it, you know, for the people out that are like, well, I heard about this options. I pay, I'll do $4,000 or $5,000 for a service that'll tell me what to do. That's what's going to happen with it. And I don't know what's going to happen with it, but I see that there are services out there that do it, and they're doing a disservice to people. So at least we feel like that we can help folks. All right. So any questions? So again, you've got I showed you the tools that if you want to do this yourself, you can. So you don't have to do this. It's just like you've already got everything. You're going to get a copy of this. You're going to get a copy of the checklist. Everything that I showed you is already built into Think or Swim. Okay, so you got it. You can do it on your own, totally fine. If you want to kind of take the, okay, it would be cool to do this with John for the next year. What I'll be doing is, again, once a month, we'll be doing live trading. And then as I'm doing stuff in my account, I'm just going to text it out to you so you can see what's going on. And of course, most importantly, no reason to pay this price, because you can do the $7 trial and do either for an annual membership or the quarterly. Okay. Yeah, so a couple of people asked, so those toss indicators, they are on there. Now what we did is we built those utility tabs. So for those of you, if you guys sign up for this, I'll just give you all those. Now they're already into toss, but if you want the exact chart layout that I have, that's fine. If you sign up for this, I'll just give that to you so you can actually have the exact same chart setup that I'm using as well, just to make it easier. But again, you can construct it yourself. Again, there's no, there's nothing on there that I showed you that's not available on Thinkorswim. Yeah, so good question. So what is the difference between these trades and the gold room trades? Okay, so in the gold room, for those of you that don't know, we have an options room, the gold room. And in there, we basically trade everything. Large accounts, small accounts, income accounts. We're doing a lot of straddles, strangles, pinning plays. Okay, so sometimes I will post a small lot trade in there, but not all the time, because it's just, there's a lot of stuff going on there and I can only manage so many things. And so the idea with this is just, okay, look, this is 100% dedicated on small account trades. It's more private. All right, it's, everybody can kind of get first dibs on the trades that are happening and get positioned. And that's really the idea of it. And it's just a way to kind of have confidence. It's like, you know what? So two things is, one is if you're busy, this is a way to just kind of like, great, you know what? That looked awesome. That's a pretty decent investment for that potential results that we saw there. And I don't have time to look for the stuff myself. I just show me the fish, right? So that's part of it. And the other part is if you're doing it yourself, it's kind of a process check. Because remember, what's going to happen is after a couple of weeks, you're going to be doing this, and then what happens if it's like you're having that day and you're having FOMO and what's going on and I don't know what to do. Oh my God, the market's rallying without me. And then boom, you get a text alert. Hey, this is what we're doing in the small account. It's like, okay. So it's just kind of like, it's like having like a coach. A coach is there to be with you by your side, kind of like that. And obviously, if you're in the gold room, I'm happy to answer questions. Again, we haven't done something like this before. It sounded kind of fun. I think it'll be helpful. And, it's just kind of, we thought we'd give it a shot. John, are most of the options below $8 or so? That's a great question. So one of the things I do is that if an option is over $8, okay, so let's say this, oh my gosh, this option's $20, we convert it to a debit spread, and typically a debit spread that's under $8. So that's one of the things in a small account. So like in in the room, I'm buying some $40 calls on Amazon, but in a small account, I can't do that. So maybe I'm doing a $10 wide call debit spread for $6. So the small account is definitely taking into consideration and making the assumption that someone is trading. I mean, so here's a good question. I mean, there's not a model portfolio. It's like, okay, is the model portfolio going to be 5,000? Well, it's assuming you're trading less than $25,000. And guess what? What I'm doing is like, hey, and I'll say like, this is a full size position, so 15% of my account, that kind of stuff. When will the trade posting start? So we're getting everything kind of teed up this week, and we're getting everything ready for the first. So we're going to get set up over the next couple of weeks, and I think we're going to get everything teed up for the first. We're going to do the first like live class. I think it's either in 2.5 or 3 weeks, and that's when we're planning to kick it off. Yeah, Michael, and by the way, you'll get a copy of this presentation as well, for sure. You mentioned that you would save your chart layout for us. So it would include the IV. Good point on the RAF. It would have anything that's already on TOS. So the one that I showed you, it would have everything on that. So it's the, all these utility tabs for the ADX, ATR, beta, Bollinger % B, 52-week channel, 60-day channel, RSI, stacked EMAs, stochastic, VWAP, daily, weekly, monthly VWAP, and then the daily, weekly, monthly ATR, and then that whole IV rank system. So yeah, I can, for those of you guys that sign up, we'll get you copies of that, for Thinkorswim. You can just have it. And of course, you get a copy of these slides so you can go through and kind of study. If you don't want to do this, that's totally fine. I get it. You'll still get a copy of these slides. You can try to recreate it yourself. You have everything, you got the checklist. So that's all good there. Yeah, Patrick is just saying I've got a small problem. It says my coupon limit has been reached. So Patrick, if you've got an issue there, I know we've got some folks here hanging out. with me and my cold tonight. So what you can do is, this is one of the things I love about Google Slides, whatever that is. 1,000, 1,000. There we go. Oh, okay. So you can call us right now. We're 512-266-8659. And then you can also email us, and the email is very easy. It's just support at, of course, the same website down here. If I can write it out, simpler. Oh my gosh, this is a lot of text. Trading.com. And again, we're gonna keep this pricing in place for the next couple of weeks, and then literally after that, I think you'll see it go up to like $39.97, doing like cold traffic Facebook, which I would not want to subject you guys to. Do we need to take the small lot course first? So if you just want the alerts, you're not going to need it. If you would like to access the small lot course that we just finished, it's a great course. You could also call, it's not included in this, but it is something you can call, and I think they'll set you up some kind of a deal for that too. Oh, okay. So the $7 price was simply this. If you are not a gold member, so gold member pricing, so we have a simpler options gold membership. If you're a gold member, this is your pricing. Okay. If you are not a gold member, now I don't mind if you want to pay full this price, that's fine. You're like, hey, I don't want a subscription, that's fine. But what you can do is if you just go click sign up today, you can sign up for a trial for the gold membership for $7, and then you're eligible for that price. Oh, okay, Howard, great question. I'm a gold member, but it's still going to charge me full price. So this is probably something I should clarify. That if you are a member, okay, if you are a member, you need to log into the site. Log in to site. So that's probably an important tidbit there. And if you do that, it'll see that you're a member and it'll put the right price in. The trial period is, I think it's like 30 days. Job of the put, that was awesome. Yeah, so Otis, if you got a question on, like, if you got the RAF and you're not sure how to use it, we definitely have videos, different things like that. Just shoot us an email. They can point you in the right direction. For the live trading, so the live trading is kind of short and sweet. We'll do 3 hours of live trading together in the afternoon, and then we'll do some Q&A. And that's really just more to touch base, kind of come together. Because remember, in between the live trading, you'll be getting the alerts. And I say text alerts, but I believe it's going to be, it's either iOS or Android or maybe email, because it's not like there's going to be anything that's like, you got to get it right now. A lot of the times, the orders we send out are, hey, if this comes to this level, we want to get it, and here's our limit price. So the good news is it's not like you have to sit there waiting and hit refresh and refresh. These are all methodical, well planned out trades. Will the live Q&A be recorded? Absolutely. So for some reason, there is a day that you can't make with the live trading, you'll be able to access the recording of that later. No, Cindy, you don't. So again, in this particular case, if you want to do the trial and it's not for you, you're fine. We're just kind of, this is just, since we're launching this, we're just kind of making a special case for that. So we don't want to, we want to make this easy. How much NLV will I need to actually be doing all the trades? So I started the beginning of the year with $6,000. So I think that's a good starting point. If you only have a couple $1,000s, that's fine. Because remember, you'd still do it based on percents. My text alerts that go out are going to assume less than $25,000. And I don't put quantities in there because it's going to be different for everybody, right? But it'll be, all right, we're doing this option for $4. Okay. Regardless of the size of the starting account, you're still learning how to fish. Absolutely. Absolutely. Yeah, no, Sebastian, my plan with the small account is to keep it under 25. So, you know, it did go a little bit over 25,000 last month, and I'm just going to wire money out. It's like, because I want to stick to the under $25,000 rule. Because if it's suddenly at $35,000, then all of a sudden I don't have to worry about the day trading rule. Well, that's not fair to people that have it, right? So I'm trying to, let's, just assume under 25, and the best way for me to remember that is to keep that account under 25. John, if everyone makes the same trades during the live trading, is it enough to move the market? So sometimes, Darrell. So we do, one of the things we do with that is we've learned over the years is we definitely do limit orders. So we're not chasing it. And guess what? It almost always comes back. And then also there's some stocks that, they may just be too thin to trade. So, so we do take that into consideration. We have done trades where we end up being on CNBC. Like there's unusual options activity in Target, Bob, and that's just us placing a trade alert. So we're conscious about that. The good news is this service is going to stay pretty small, so I don't anticipate. I mean, this is a small lot account, right? You can't have more than, I don't know, it's like 500 or 600 people on this, because then it'll be too impactful. So that's part of it too. Is let's give you guys first crack at it, and then we'll lock it down, and then we're going to do a little bit outside of this, and just almost as a service. I mean, we've seen it out there where there's a lot of services out there where these companies charge like $5,000, and I'm sorry, but it's not that good. And so it's like, okay, well, and what'll happen is some people are like, well, the $5,000 service must be better than this $997 service. So it's like, we'll throw it out there for $5,000 for people who are making that cost comparison. But you guys are in the family. So if you want to do this, you can do it at the much, much, much lower rate. We'll try to get on CNBC at least once a month. Is the $7 trial membership for the gold account or the small lot live trading? Okay, so it's for the gold account, and as a gold account trial member, you can then get the small lot live trading for the discounted price. Okay, and you could do it quarterly or annual. I'm logged into the site and can't see where to find up. Okay, so Robert, here's how I think you do it. I think once you're logged in, then just open up a tab on your browser and then type in this URL below, simplertrading.com/growth, and then I think it'll recognize you as being logged in. And my apologies there if it's a little clunky. We're definitely traders first and website builders second, but we're slowly but surely getting this all smoothed out as much as possible. No, that's awesome, Jenny. Yeah, and I see that too. I mean, it kind of confounds me. So I'm like, you know what? Let's try this and see how it goes. No, so if you want to just try the trial and it's like, it's not for me, that's fine. You can still then continue on with the again, that's really only for this meeting that we're doing now. You guys can do that. So you can try the trial for the gold membership, and if it's like, I would suggest trying it out. You'll get a lot of information. Then after 30 days, you're like, it's not for me. That's fine. You can still continue on with the small lot. Hi, John. I took your Elite SAS class on March 8th. As of today, my account's up 23%. Hey, I love it, Tom. Great. Fantastic. Now, remember, the key, though, of course, is that you keep, if you get one of those drawdowns, cut it loose fast. Since the beginning of the month tends to be better for trading small accounts, can we have time with you at the beginning of every month once in a while? Yeah, okay. You know what, Jenny? That's a fair question. We'll look at that. So we threw the dates up there, and that we could change them around. Of course, at the beginning of the month, you'd still be getting the text alerts, right? So But it's a good question. So what we'll probably do is during the first one, we'll spend some time, again, for us, this is new, right? We'll do some Q&A and stuff like that. When we sign up, will we still have access to the gold room trading? Absolutely. So I know a lot of people are actually doing both. They're like, cool, gold room, because in the gold room, I'm only in there 3 hours a week. That's kind of my sustainability there. In the gold room, you got access to Henry, to Danielle, to Allison, to Raghee. I mean, you've got, all this great stuff happening in there. So you got a variety of things going on. And then this is just laser focused on, boom, small accounts. How many days will this be available? Yeah, it's a good question. If you do need to open up an account on Thinkorswim, and by the way, you can trade with whatever broker you like. We don't care. We do like Thinkorswim. We do have a link.com/toss, discounted Thinkorswim. So you can go use this link. If you've got like Schwab, it's totally fine. Like we have no horse in that race. But if you'd like to like just get the indicators and look at them, and you can still trade on Schwab or whatever, you can go to simpletrading.com/toss and then open up a Thinkorswim account. We'll have to double check because I know we did opt out, discounted rates with them. Oh, hey, Pavlin. Yeah, no, it's good. Oh, I didn't know you're in digital marketing and stuff, so that's awesome. No, that's good. Yeah, no, we're trying, right? Figure if we're gonna go out there head to head with some of those guys, we should at least at least have the equal footing from that regards. Yeah, and we actually do one as for Tastyworks as well. So I use Thinkorswim and Tastyworks. So for Tastyworks. Yeah, Cindy, it's a good question. The honest answer is I don't know, but I believe you could probably call or email and just say, hey, I've got a login that I use. Can I just add this on? So I'm assuming that's how that would work. And we'll give you guys plenty of time. Like, this is not like, okay, you got to do this in the next 30 minutes. We want you guys to have time to kind of, get this set up and get squared away as well. Yeah, and if you have okay, quarterly is fixed. Yeah, and remember, if you guys have any questions, your best bet here is you can call us here in Austin, Texas. Then, of course, you can email us. And we'll get you taken care of there as well. A couple of people asked if we have any more slots at our live event coming up. We do have one live slot left. And then you could go, that's where if you want to come to Austin and hang out with us, if you go to simplertrading.com/ oh my gosh, I think it's mentorship. I should double check. I know it'll be fun. We'll have Lance Armstrong there as a guest speaker talking about, getting through very hard times and surviving and all that kind of stuff too. One live spot left in Austin, plus you can also do live streaming. So again, for those of you there, a couple of people were asking about that, so I just want to put that up there. John, I've done a lot of your classes, but the SAS has been the most impact on my training. That's awesome. No, it's good to know, Tim, because it's like, I know, a lot of the classes I've done over the last couple of years have been kind of focused more on kind of like, all right, here's an advanced idea, and let's just spend time on the idea, versus like a holistic approach. So no, it's great. How to find where to buy an account. Dr. Call, I'm not quite sure of the question. But if you do, Oh, I guess, you probably want the link. Maybe it's the link on how to do this. So for this class, this is a lot of links up here, right? For this, www.simplertrading.com/growth. And we've got a bunch of other kind of stuff up there too, because people had been asking for it. Do the texts start immediately or later in the month? So it'll be a little later in the month. We got to get a couple of ducks in the row. We want to make sure that you guys are all in and taken care of and ready to go. We're going to make sure you get the PowerPoint slides, and then in a couple of weeks we'll get going. Yeah, so for TOS, there are a couple of scans that I have. So if you are signing up for this, I can get you some of those scans in Thinkorswim. It'll help kind of narrow some of it. I missed most of the webinar. Well, welcome. Will there be a recording link sent out? Yes, there will. The quarterly is working now. Great. Okay. I purchased the basic version of the SA class. Can I upgrade the Elite to get access to the recordings? Absolutely, Mohammed. The best plan for that is to just call or email us, and we can get you hooked up with that for sure. Oh, very nice, Will. No, it's good. Yeah, you're kind of getting into the groove, so that's great. No, Howard, good question. We will take that into consideration. So we'll make sure that, if we're starting into, whenever we start sending out the text, that's when we'll, even if you're charged earlier, we'll make sure that it's extended beyond that. So if that makes sense. We do just want to get people locked in because we do have to limit this, right? It's like, okay, some of these things are not, you can't just have a bunch of people pile in. So we just want to make sure it's like, all right, we got everybody locked and loaded. Now let's go. If I purchase the quarterly, can I upgrade to the annual later? I believe so, Tom. Yeah, it shouldn't be a big deal. How long do the trades last on average? So good question. I would say the average trade lasts from about 3 to 10 days. So we're not doing leaps. We're not doing day trades. What is the max number of positions at any one time? I don't like to have more than about 6 or 7. So if I've got, like, say 6 positions, I want to add another one, I got to sell something. So you'll see my exits coming through too. And then a lot of times if we get into something, we'll actually post the exit order right there too. So you can actually work that as well. So on something like this, I would say it's typically anywhere from 2 to 4 trades a week is a good average. I mean, there certainly could be more depending on what's going on. But, again, part of it is like, all right, we got 6 positions. We gotta manage those. Very good, Pavlin. Have a good workout. See you in Austin. When you drop under 15% NLV, do you close all positions? Francisco, yes. Now, if there are some that are working, I'll keep those. Like if the market's crashing and I've got 2 hedges on, right? I could just close all the longs. But yeah, I mean, it's a when in doubt thing. Your main goal is to manage your net liquidating value, and you're doing that without any shame at all. That's just part of the deal. It's like, all right, I'm doing my job. Will the trades come as text or notices through the app? So I believe it'll be notices through the app, and probably an email summary. John, I'd like to appreciate you and your organization's ongoing creativity and responsiveness to traders need to learn, and also the quality of each of the traders support staff, along with a solid web backend. And appreciate it. No, here's the thing, and I know a lot of what I would just call the trading firms that are out there on the education side. We have the best team out there. It's a very dedicated group of people. Love doing this. Love the trading part of it. Let's see what we can do with the website. It's a true team effort, which is great. I mean, it makes all the difference. No, Stu, correct. So if you do the gold membership and you're like, it's not for me, that's fine. It's okay to cancel it. Just for this sign up period. In the future, that will not be the case. But again, you guys are kind of in the family. You got the email, that means you're in our database. So we're just kind of trying to make it as easy as possible for you. Yeah, so what time frame? So really, yeah, just the daily. Very rarely do we deviate away from that. Sometimes if there's some crazy stuff, we may look at a 30-minute, but we're keeping it pretty simple. Sometimes the weekly. So there could be some trades, a weekly option or a weekly chart. So maybe that would be a little bit longer term trade. But if that's the case, we would certainly say that in the text. Laura, so yeah, if you do the quarterly, I believe you'll be fine just renewing it from there. Yeah, again, so for you guys, it's kind of like you're kind of in the family. You're trying to make it as easy as possible. And then once we kind of get you guys, whoever wants to do it, kind of locked down. It's like, great, okay, now we got this many spots left. We'll throw some of the ads on Facebook, get a few more in there, and we'll be, be good to go. Good question, John. Will you be generating the trades, or will your staff be generating them? So it's something that I do. I'm responsible for. I'm going to have some help with Henry. He knows exactly what we're looking for. So on times like if I'm traveling, it doesn't mean we have to stop. So he and I work very, very well together. And he knows all the criteria as well, and oftentimes finds better ways to do this than I do. Very, very tech savvy, and you've been obviously looking at the markets for a long time. Okay, so how do you find the gold member $7 trial? Okay, good question. So I'm going to, how do I do this? Oh my gosh, it's so much stuff. Okay, so on the website, if you go to simplertrading.com/growth, okay, what you're going to see is that a little, okay, I'm just going to move this here. This is very, very, and I'm waiting for this to go away because of course it's covering the URL. Come on, 1 Mississippi, 2 Mississippi. Okay, so if you click this little link here, sign up, that will get you for the trial. Okay, from there you're going to create a login, and once you're logged in, type this in again, and then you'll see the member prices. So I'm going to put this up in this corner. Let's see. Maybe that would work. Kinda. Perfect. Whew. So if I signed up for the Elite originally with the small account class, am I all set up? So Greg, this is a different continuation. So the Elite class is over. Well, I think we have our last follow-up tomorrow, and then it's done. So this is kind of a continuing, hey, if you like that and for the next 12 months and you want to get text alerts on this stuff, this is like the, and I think we talked about it a little bit in that class, but that's what that is. All right, guys. Well, I am nursing a cold, and I am starting to feel the effects of it. I kind of got in the zone there and forgot that I had a fever. So I'm going to wrap this up. I will leave this page up here, and it's got all of the information that you need. Okay, so this web page, you go to simplertrading.com/growth. If you want to get discounted Thinkorswim or Tastyworks accounts, Tastyworks accounts, do that. We do have one live spot left in our Austin event, our Austin mentorship, which happens this week, which is going to be great. But you can also do the live streaming if you're interested in that. That's the URL. If you've got any questions, give us a call or an email. And that's it. I think that's it. Whew. Yeah, I think I may sleep in until my room session tomorrow at 11:30. All right, guys, thanks for joining us. Again, hope you learned a lot tonight. I'm looking forward to doing this. It's going to be a lot of fun. You guys have a great rest of the evening, and I'll, in theory, wake up tomorrow feeling halfway decent and see you guys tomorrow morning in the room. All right, have a great night.